Hello and welcome back to our video training series. Now in this video I just want to continue on from where we left off from our last video. Now we've entered all the information, the inputs. Now all I have to do now is to get my first feasibility analysis report is to press the calculate button. As soon as I press the calculate button, the screen gives me the summary of the development. So the first thing I obviously want to see is the profit margin, which is quite healthy, and it gives me summary of the gross sales, the selling expenses, etc., etc. So all this information is here. I can see what the GST adjustment is, or how much GST I have to pay, what the net income is going to be, the total project cost, which includes everything, including the land, the development costs, and everything. So this the pure profit margin is the difference between the total project costs and the gross sales, and the percentage is a profit. Now the other thing the system does, it says, look, it gives me some recommended amounts here. So it says even if I bought that land for $720,000, which if I go back to my input screen, I said I'm going to buy it for 700. But what the system is saying is even if you bought it for 720, you still will make 25%. The other thing the system is saying is if you purchase the land for $700,000, the minimum you can sell the units to make profit is $711,000. So it just gives you some parameters for you to work with. So just to give you how quick it is, I can go back and say, okay, I want to change to 710 and see what it is. So it's almost 25%. So even with that, I should be able to make a profit on this job. So that's the basic summary. Now to see what how the system calculated these figures, you can go and navigate through the pages, which will go to the next page, which is our detail page. And in here it actually gives you more detail of how it came up with the figures it did. So the most important one here is, if you look at the total development costs, so it shows me the direct building cost, which the builder will charge to build those units. Then it's got the finance establishment, the working drawings, the quantity estimating, structural engineer. Now most of these figures are based on industry standards. So you can actually see an open space levy. As you noticed in the beginning, I chose that we are in the city of Monash. And there is an open space levy contribution. There's also the system has automatically calculated the land tax and the rates. Also the stamp duty, which are basically formulas, state dependent formulas. So that just to show you how the workout is done. But most importantly is the summary. So if I went back and said, well, the real estate agent reckons, we should make them bigger, for example, right? Now I've done the research, and but we say we go bigger, so we increase it slightly. We go to 150 square meters, or 140 for that matter, and just see what the impact is. So you immediately can see that it is actually dropping, and the system is saying to do that, to get profitable, you have to sell it for more. So I go back and I increase my selling price, and I say, well, I'm not going to sell it for 710, I'm going to sell it for 730, and I calculate. So now I'm in a profitable range. So you have to be careful, if you do increase the size of the units, you also have to increase the selling price of the unit. And the worst and best case scenarios, maybe, if you want to compare, say, what if I got lucky and I sold it for 760, for example, each, and you calculate, and it gives you the you got 30% margin there. So what I would do here is actually, I'll say, to keep the best and worst case scenario, I'll say, look, this is scenario 1, so that's version 1. I'll change the address to version 1, and I'll actually change it back to my 700,000 and 130 square meters. So I'll recalculate. So it's still below what I'm looking for. So I'll have to possibly increase the selling price. So I'll go up to 710. So that should be my basic worst case scenario. Now, if I wanted to do a best case scenario, I'll just say that I'll say a new job, and I'll say that's version 2. And what I'll do is I actually go and change the selling price. Say I got somebody told me, another agent told me that you can sell it for 750. So I calculate, and that's my best case scenario. So now what I have here in the drop downs, I got my worst case scenario, where I can go through and have a look at the different pages and the results. And I also got my best case scenario, which is my version 2. Again, it's a different percentage, and I can have a look at the summary or the detailed workout and see exactly how the system calculated the amounts. So as you can see, it's very quick, the system, very simple to use, and you can just very quickly decide what it is that you're going to do. The other thing, obviously, is to go and have a look at the settings, and these are settings that we actually provide as part of the software, and these are industry standards, but you have the opportunity to change them. So the minimum return, if you want to make it 30%, you can change that, and then go back and see, just recalculate, and the system will tell you, well, that was in a best case scenario, so you're still within 30%. But the land, it also gives you what you should pay for the land. So if, for example, if you went and paid more than $700,000 for the land, like 730, it is below, well, it's 28%, but it's still below what your setting is here. The other thing is, if you get a better percentage for your mortgages, you can change them here, or if it's worse, you can increase it, and you can have a quick look at all the assumptions we have made here. And if you got an arborist that does it for a better price, you can actually adjust it here and go back, and all you have to do is just press the calculate button, and it will recalculate it very quickly, and also amend the details and show you exactly how it's come up with a summary. Well, that's all I wanted to show you on this video, and hopefully we'll see you in our next training video. Thanks very much for your attention.